This is the Retirement Key Podcast with Abe Abich, founder of Abich Financial Services.
I want to ask you about this article on Kiplinger.com talking about the tone of our retirement, because apparently how you spend your first year of retirement is what sets that tone for the rest of it. The first year one sets the tone for all the years to come. Apparently, there's two kinds of folks. There are those who see the freedom and the savings, and we get a little overzealous and we start spending our money. Then there's the opposite side, which the people that makes me sad is they're so nervous. They spend nothing. They rob themselves of the life they've worked so hard for because they're afraid of running out of money, Abe. So it's said that it takes us about 2 years to really find our happy place. Nobody, of course, wants to hear the word budget. How dare you say it? However, maybe we talk about income plans all the time and the importance of an income plan. And should we be thinking about how a spending plan needs to go right along hand in hand with the income plan in order for us to find our stride?
Absolutely. Look, a spending plan just sounds better than having a budget,
Sure
doesn't
does.
it? I mean,
Sure
what
does.
did you just save these millions and millions of dollars? You just worked your entire life to get to retirement,
Yeah.
and now you're on a budget? Okay, yeah, I get it. I understand it. We need to be, prudent with our money and watch our cash flow every month, but just sounds restrictive, right? What if we just started to change our thinking, right? Instead of just kind of holding on to every dollar, which a lot of people really like to do because they're scared of running out of it, to putting together a plan that will give you the best chances of success and best possible outcomes of having that money last you into your 80s or 90s, but spending it and enjoying it. I mean, this is what we saved it for.
Right.
And so many people across the DC metro area that we meet with before they become clients of Abich Financial are what we say asset rich, income poor. And that all comes down to not having a spending plan. So I think a spending plan sounds way better than having a rigid budget.
I agree.
Right?
Yeah, agreed.
And I think a plan that helps retirees align expenses with their priorities and adjust that as they learn what truly matters in their new lifestyle is really important. I think we need to also expect an adjustment period. You mentioned 2 years, or the article mentioned a 2-year kind of time line to get comfortable with our finances and cash flow. During that time, tracking expenses, revisiting your plan regularly can prevent costly mistakes and reduce anxiety about running out of money. And then flexibility is key for success. Your plan should allow for changes. Health is going to change. Hobbies are going to change. Travel is going to change. It can shift in time. Building in flexibility ensures retirees can enjoy freedom without jeopardizing long-term security. And I can't tell you how many times either we talk about it on the show almost weekly that people come in all across the DC metro area. I'm talking sometimes 2 to 3 hours away. They'll drive into our headquarters from the most remote parts of the Eastern Shore in Maryland sometimes to Hagerstown, to all the way down in Fredericksburg, all the way out west in Winchester, all over, and then obviously all over the entire Beltway area here in the DMV. And they come in typically with plenty of money saved, and they're like, I don't know what to do. I knew how to max out my 401k, save, invest, pick good stocks, pick good funds, not spend too much when I was working and saving, and I've got $3 million. I have no idea what to do with it. So we recently helped a gentleman who kind of fits this bill as well. He's 68, $2 million out of Fairfax, Virginia. He's at 6 risk on our risk scale, that 60-40 kind of allocation. Former federal employee. All of his income in retirement, all of his basic spending needs in retirement are met through the federal pension, that's the FERS pension, and his Social Security check. And then he's got $2 million on top of it.
Nice.
And he's like,
amazing.
Yeah, every time we meet with him, we're like, hey, you're in a really, really good position, and I want to hear more about what you're doing with this money.
Yeah.
And so, he and his girlfriend or fiance, I think, they're going on an Alaskan cruise in July.
Yeah.
They're going to Europe. And so they're doing some things, and we get excited when we hear about that because if you're not doing those things, then you're going to get to 80, 85 and have regrets. All because you didn't have a plan that gave you the permission to spend, that showed you how you could spend without the fear of running out of money. And that's why he came to us. No spending plan, $2 million accumulated, asset rich, income poor, all bills paid for by the federal pension and Social Security, wanting to know how he could spend, but didn't know. And because of that, he had anxiety around the whole thing because he was still stuck in a phase 1, growth-focused, investment-focused, rate of return-focused plan. While all that's still important and can continue, all of these other pieces of a comprehensive plan need to be included and plan for at the point of retirement or in retirement. And so the solution for him, Heather, was quite simple. Let's put this spending plan together. An income plan and a retirement roadmap will clearly lay out all the income streams over the rest of your life, hopefully inflation adjusted. And so if you're listening right now and you say, you know what, Abel, that sounds a lot like me. I mean, we have several $1 million, $1 million, $5 million, $10 million, whatever it is. And I feel pretty good about the amount of money that I've saved. I feel pretty good, even with recent market volatility, about the number that I have. But I'm scared to death, or I just don't know how. I can't get my mind wrapped around taking money out of my life savings and my nest egg to actually enjoy it. Because a lot of people have never done that when they were working. And so if you're listening and you say, you know what, I want the same type of spending plan, then we want to help you put together that same income plan and roadmap that we helped this gentleman in Fairfax with. If you're 55 years older, you save $500,000 or more, and investable assets we can help you manage, we want to offer you the same spending plan, the same type of plan that we helped this gentleman in Fairfax put together, complimentary.
All right, that's more of a bigger picture overall thing. Let's hone in a little bit on the things that we're seeing from the headlines right now, Abe, and what we can do in between and in the meantime, because the economy is feeling the oil shock thanks to the war in Iran. It's estimated that sustained oil prices above $100 a barrel will add nearly 1 percentage point to headline inflation. This is portfolio manager Jason Katz on Fox Business.
What's not complex is that stocks go up when oil goes down and vice versa. The patient, the U.S. economy, is in very good shape to fight the disease of oil. Economy are growing above trend, unemployment below 4.5%, earnings likely to grow 12 to 15%. So investors have to distinguish between these front page risks and bottom line results.
So, do you know the famous quote? I think we've even talked about it here on the radio show before. Mr. Rogers talking about his mom taught him in times of crisis, always look for the helpers because they're always there. I feel like that's the vibe he was just giving to us, Abe.
I really like his mentality there. Don't get caught up in short-term market movements. Don't get caught up in political football. Don't get caught up in what could happen and you're thinking of the worst case. Think positively. And don't be distracted by what might seem like major news, and it is. Look, there's a war going in Iran, but just as quickly as things can go backwards, things can turn around. And I saw a great quote the other day from a big-time financial services CEO here in the country, and he said, over the last 75 years, the average intra-year market drop has been 14%, which means during the middle of any calendar year, the average downturn or drop is negative 14%. So if you're overly stressed out about the current market being down around 3 or 4%, then the stock market might not be for you. Look, downside volatility is the price investors pay for long-term outperformance. If you're taking risk, then the reward is probably going to be there long term. You need to be able to weather the ups and downs of the market.
But also, the point you've also made on this program is that there is always opportunity. And I think that that's something that you really strive to point out to folks is don't focus on just the negative stuff that's happening. What is the opportunity within? There's always a silver lining.
There are. And there are opportunities happening in the markets right now. The sector shift and, look, tech and AI stocks and those parts of the markets that have done really well, obviously they're going to get hit the hardest, right? But you look at some of the dividend paying, companies like, Home Depot and IBM and Lockheed and Chevron and Exxon and just some of those, more steady Eddie types of companies and pieces of the market have actually done, pretty well recently because of that. So there are always opportunities. You just have to be aware of them, kind of know where to look for them as well. We just helped a gentleman out of Purcellville, Virginia with about $4 million saved. He's a 7 risk on our risk scale, about a 70-30 allocation model. No retirement plan, wants to retire, but doesn't know how, kind of concerned about market volatility going on lately, wondering if and when he could retire, and if this is all doable, because once he found out that he could retire, that would give him the confidence to kind of tell his employer, hey, I want out whenever he makes that decision, right? And so $4 million saved. Here's a single gentleman that, has more money saved than he's probably ever going to go through. We put together a portfolio x-ray to show him how he's currently invested, all the pros and cons of it. And we started talking about this mindset shift and switch you talk about on the radio show almost weekly, where he needs to start going from accumulation, which he's done a fantastic job of, to decumulation. We talk about this often. It's like one thing to have a big pile of money. It's another thing to enjoy it and not, be scared that it's going to run out when you have the right type of plan.
Right.
So that portfolio X-ray and analysis really helped him to understand, I do have way more than enough money saved, way more money than I'll probably ever go through over the course of my lifetime. I don't need to take on the risks that I was taking 10 to 15 years ago. I can actually get away with reducing risk, maybe down to a 60-40, getting reasonable returns, sleeping better at night, having the nest egg generate income, and still maybe having it pass on to my loved ones too at the end of my life. That was all discovered through a portfolio X-ray and analysis to really help him determine where he was and where he should be headed if he wants to pull the trigger and fully retire and never look back. If you are 55 years old and older, you have saved $500,000 or more in investable assets we can help you with. You say, Abe, that sounds like a lot like me as well. I'm single or I'm married and I've got about $4 million too, and I'm wondering if I can fully retire, but I don't have a plan and I need a second opinion. I need someone that does this every single day to kind of give me the confirmation and the clarity and the confidence I deserve to be able to make that decision confidently. We'd love to help you make that decision confidently and never look back. That portfolio X-ray and analysis, complimentary.
Abe and his team, they're here to help you do that. So it's theretirementkey.com to start the conversation, or you can just click on the links we've got posted in the show notes.
Thanks for listening to the Retirement Key Podcast with Abe Abich. To learn more about Abich Financial Services, visit theretirementkey.com. And join Abe for his radio show, The Retirement Key, Saturdays at 8 a.m. and 2 p.m. and Sundays at 8 a.m., 2 p.m., and 5 p.m. Abish Financial Wealth Management is a registered investment advisor with the SEC. Registration as an investment advisor does not imply a certain level of skill or training, and the content of this communication has not been approved or verified by the United States Securities and Exchange Commission or by any state securities authority. The information contained in this material is intended to provide general information about Abish Financial Wealth Management and its services. It is not intended to offer investment advice. Investment advice will only be given after a client engages our services by executing the appropriate investment services agreement. Information regarding investment products and services are provided solely to read about our investment philosophy and our strategies.